desirable. Let's get over to Singapore because Mikio Kumada is global strategist at LGT Capital Management, and we're going to just get Mikio, I want to get your reaction on what it means for Asia, this bailout for Greece. Many people say, okay, yes, it is sorting things out for now, but what happens in 6 months' time, maybe a year's time as well?
Well, you know, as far as Greece or the Southern European problem is concerned, I think it'll stay with us for a long time because it's a very, very difficult structural issue. I think from an Asian perspective, we should really focus on the region's problems, on our own problems, if you will, because there's plenty of them too. Thank God they're not as bad or structural as they are in Southern Europe, but there are significant challenges, and I think that'll be the driver for Asia. And the sooner we start tackling this, especially the question of you know, whether China will have a soft landing and what it actually means for markets, the better for Asia. So we should refocus from this Greek story, which is going to stay, and look at what is really happening inside Asia, which is much more important.
True, but what happens if we see further countries having to go cap in hand again? I mean, I'm talking about Portugal here, perhaps, if they have to go now to the Troika and also perhaps ask for monies to pay back their bondholders. That's one aspect, but I do get your point that it's time to refocus on what's going on in Asia. And what's your view of what's going on in China right now? We get that flash Purchasing Managers Index in a short while, and we could be seeing a fourth month of contractions when it comes to that.
Yes, well, the European crisis is in a way, of course, related to what is going on in Asia, or more generally in the emerging markets, because the big challenge for all emerging markets going forward is going to be how quickly they can reduce the dependence on demand in Europe and in the Western world more generally, because the Western world, like Japan in the 1990s, is deleveraging. So they need to, you know, the emerging economies need to basically change their business, or tweak at least the business model a bit. And China at the moment is probably the most successful one, but it's also having problems because there is too much credit in the system, and we don't know how much of that is actually bad loans, and how long it'll keep damaging or holding back, let's say, the growth rate. The trigger in Asia will probably be a significant easing in China, but I think it's a bit too early for that.
Yeah, but people are saying that when we get inflation down to the 3% handle, that's when we're going to actually see interest rates proper lower. Would you go along with that?
Yeah, I mean, directionally, yes. At least we would need to see the moving averages. You know, we would need to see not just the headline inflation, but we would need to see a trend in inflation pointing towards 3%. And I think that will allow the Chinese authorities to do some more meaningful easing. And they would probably also have to prepare let's call it, credit infrastructure a bit in a way so as to actually pump money into sectors that need the money, rather than pump money somewhere that doesn't actually need any prime pumping because there's already an oversupply. And I'm talking about such as specific areas of real estate and so forth. So it's complicated.
It certainly is, and I was looking at your asset allocation at the moment, and you're very overweight cash. Now, that's not very adventurous, is it? And tell me, first of all, how much do you mean by being very overweight?
Well, I mean, very overweight in cash is always a relative issue. We actually did reduce our cash position in January, but we still have a high position in cash, and that reflects, you know, our event risk outlook going forward. I mean, you mentioned Europe, bad things can happen there, and basically the simple fact is, you know, when we do asset allocation, we look at trends, and if you look, for example, at stock markets, moving averages, long-term moving averages, basically, except for the U.S. and interestingly, by the way, also Greece, all markets are still moving lower. So what we are seeing right now in Asia is just a mean reversion movement. Markets had fallen way below their moving averages, which are pointing down, and they're climbing back towards the moving average a little bit, but the trend hasn't changed in Asia, so it's still a very more or less pronounced downtrend in most countries in Asia, with some exceptions such as Japan, etc., which is sort of flattish. So there is still room for plenty of caution out there, I think. Ex-US, I must say, among the major markets.
Mikio, pleasure having you on the programme as ever. Mikio Kumada there from LGT Capital joining us there from Singapore.